Let's look at KFY. This is the company, Korn Ferry. Paul, what is...
United States firm engaged in organizational consulting and management recruitment that helps clients fill mid to high level management positions. That's what I did here to get this group of numbnuts. So I'm gonna sue them.
Wait, who's the numbnuts? The big guy or the little guy? Okay, let's do this. What is the market cap for Korn Ferry?
Call it $3 billion.
$3 billion.
Look at this PE ratio. 202 PE.
Everybody got time for this.
Now, wait a second. How is that even right? The last 12 months, it's actually 100. So, listen, guys. Data is, even when we have our Everything Money website, there will still be data problems here. The PE is supposed to be based on the last 12 months, and right here, the net income is about 110 to 1, not 202. So the profit margin is awful in the last year. Oh, sorry. Yeah, profit margin about 1%. That's awesome. F that.
We're looking for 10%, so 1 is not that. Revenue growth over the past 5 years, Paul.
Oh, that's why I screwed up that. Forget it. I just disregard everything I just said. Oh, wait. Also, we have an adorable dividend yield.
What is it?
0.75%.
How cute.
So on $3 billion, what is that? 1% is 30 million. 7% would be 21 million. So halfway there is, call it 25 million.
25 million bucks of dividends.
So we want the free cash flow to be greater than 25 million for us to feel comfortable and warm and fuzzy inside. Financials.
Revenue growth over the past 5 years, Paul. Pillar number 3.
1.35 to about 2. Check mark there.
Okay. Profit growth is pillar number 4.
Profit growth. 31 to 105. Check mark there. Massive growth in profit. In fact, the 1 year over here looks like, if you look at 73, 88, 30, 84, 133, 103, 105. So that might have been a fluke year, but either way, it's still a positive. So that's a good sign.
Shares outstanding is pillar number 5. We want this going down.
A slight X, 52.4 to 54. So a slight X, not huge, but it's still about 4% increase. This is, whatever. It's not the biggest deal, but you gotta understand why they're doing that.
Okay. Current assets over current liabilities is pillar number 6, Paul.
1.2 billion versus 558 million. Massive check mark. And total liabilities of 1.5, so they almost have enough cash on hand to pay off all their liabilities. Not fully, but that's a good financially stable company when they have so much cash on hand like that.
Free cash flow growth is pillar number 7.
Free cash flow growth. Oh my God, this looks big. It's so big. 42 to 195.
Wow, that's pretty good.
Check mark there. 56. What is that? 170. My brain's 177 and 212.
212. The average free cash flow over the past 5 years is 136, Paul.
136 times 20 equals 2.72.
It is.
It's currently at 3 billion. Very close. But I will say, massive growth in this free cash flow. Very low percentage of the capital expenditures go to free cash flow, less than 20%. So even though it's an X on the price of free cash flow, this one's not a terrible one. You might want to do some digging on this one from a free cash flow perspective. Let's see if there was a fluke. What happened in the last few quarters about profit? That's the weird part about the profit. Okay, so there were a couple of quarters of bad profit right here that kind of caused the problem. Maybe you throw those out. Maybe they're COVID related. Well, you'd think Nutrisystem, wouldn't they have been good for COVID? What are we laughing about, Giggles?
I mean, Paul, I love our followers. I don't know how they know so much about you. Max Equity said Paul can't do math. Thinking about Lisa, your ex?
Well, I said it earlier.
Oh, okay, keep going. Okay, fine. It's just hilarious. So your takes on Korn Ferry. What do you think, Paul?
I'm not opposed to it because of the free cash flow number, but I want to understand why their profit had dropped so much during COVID. You would think with Nutrisystem.
Well, different company.
Oh, I'm sorry.
Yeah.
I'm sorry. I keep talking about that. Yes.
Yeah.
Let's head over to Dr.
Oh, the staffing. That makes sense then.
Exactly.
Oh, it's staffing.
Exactly.
Okay, that makes sense then.
Exactly.
Let's head over to Dr. Momentum on the trading of this company.
Okay, so again, this is incredible. How much did you make on this stock, Seth? This is crazy. So we have just been through that sweet spot again, going sideways. If you want to add today, if you own this stock, add to it. If you want to get in for the first time, just know, again, that you're in this overbought area above 80%. The likelihood of it turning down on you is higher than normal. But we have a great engulfing candlestick. I would venture to say that this is through all 4 major moving averages. You're looking very good. So if you want to get in on this thing, go for it.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.